Hello and welcome to the Friday edition of the Sharesify podcast. As always, I'm joined by Steve and James. How are you guys?
Very well.
All right.
Nice. And it's been a busy week. It's been a fairly turbulent week now, hasn't it, Steve, on US markets?
Yeah, I mean, we talked about this before about volatile times, and it seems that the market's in a very capricious mood. It's largely been led by chip firms. I noticed that the SOX is close to being in an official bear market. It's down nearly 19%, which is a gobsmacking event if you think about it, given the strong rally this year. But of course, bear markets are pitched on 20% off your recent peak, so that's where we currently sit at the moment. I mean, there's a lot going on in sort of the AI trade. We had IBM earlier in the week offering pretty weak guidance, and the most interesting thing about it wasn't really about the taps being turned off AI spending at all, but it's really about redeployment of cash and capital to parts of the supply chain where there's really tight supply. So customers have been directing money away from what IBM are fundamentally doing. But more interesting than that, I think the CEO accepted that he thinks they've been a little bit slow to adapt and react to changing market dynamics. Now that to me sends a good message, because that's controllable by the firm. They can address that issue themselves. They can't do much about how their customers are spending, but they can do something about being better at spotting market trend changes. So it suggests to me that IBM can dig themselves at least out of this partial hole. And there's been a load of other stuff going on. We've covered loads of stuff on the website. Listeners, just come to the website, have a look. There's stuff about PayPal and its massive potential buyout. There's stuff about Netflix. There's all sorts of stuff of tech in there.
Yeah, and M&A. I mean, I was going to say that's the other thing that's kind of almost defined this week has been the level of M&A deals has shot through the roof, isn't it? In the UK as well, James.
Yeah, that's right. And I see Rotork agreed an offer from Swedish engineer ABB, quite a handsome premium. And talking about M&A, I've done a feature on the FTSE 250, the mid-cap index. This is referred to as the Heineken index. If you remember the advert from the 80s and the 70s,
Yeah.
due to it's constantly being refreshed through promotions, relegations, IPOs, and M&A. Currently, it's going through a rare sort of bout of underperformance against the FTSE. So I've had a chat to a few fund managers. They've told me why they think there could be a re-rating on the cards, and they've suggested some of their stock picks. So do check that out on the website.
Yeah,
absolutely.
Good point. I mean, there's so much. There's been a lot of stuff we put out on the website covering trusts and funds and so on. But the M&A stuff, interesting, ABB buying them, because I seem to remember them being a popular holding in one of the trusts we recently did a podcast with. I can't remember which trust it was now, but I know it's a very high quality business, and it's not necessarily one that retail investors will know very well. So interesting if they're showing interest in Rotork.
Oh, absolutely. I mean, it's automation, Stephen, and there's a hint. I mean, so ABB's always been famous for factory automation, lights out kind of stuff, you know. There's a hint in there that they're talking about more complex infrastructure projects, which would suggest by any other name they're talking about data centers. But they've come in with a huge premium. I mean, I don't think this Rotork's ever traded at that price. So it just tells you that, you know, if you're going to do an M&A deal in this market, and you know, UK companies are cheap, you can afford to pay up, and also you get that kind of if you land that knockout bid, land that knockout blow, it's very unlikely somebody's going to come along and try and trump you. Whereas Castle Lake for EasyJet, you know, they've had what, 5 goes? Keep upping the price. And Apollo comes in and goes, bosh, there you go. We'll pay 25p more, and the management say, thank you very much.
There's that arbitrage as well. I mean, if the buyer is a relatively highly rated company, I presume ABB is quite highly rated.
Oh, very highly regarded.
It can afford to use its paper as a make weight in that, and you make Rotork shareholders part of your wider investor family, and they can decide to walk away in their own time if they choose to. But it's a good way of actually funding these deals, because you use higher value paper against lower value paper. So it's a really sensible way of utilising a good valuation.
Yeah. And then James, you and I, we wrote about Biotech, didn't we, back in March, I think it was, and we said, yeah, get on board the sector. Well, you wrote recently about International Biotech Trust, because that had received a shot in the arm, as he put it, with one of their companies being taken over. Today, we've got Eli Lilly buying a company called AtaiBeckley, and that's a big help. Well, was a 1% holding for Biotechnology Growth Trust, run by Jeff Hsu. Now, that's the 8th company in their portfolio to be taken over this year, which kind of, I think that validates their strategy. But also in the trust space, we've had this really interesting situation where, again, Glenstone have made a couple of offers, and they said, oh, this is our final offer for AIRE, Alternative Income REIT. And AEW's reappeared on the scene. Now, they used to manage AIRE. They've come in with, Glenstone's made a cash offer. AEW UK, who I know the management of that trust very well, they've come in with a share offer at a premium to the Glenstone offer. And what it means is, of course, if you like AIRE, you want to be in a REIT, then you can continue to own REIT those assets and AEW assets. And bear in mind, AEW has paid an 8p dividend every year since 2016. That includes the pandemic, which is some going.
Yeah. I mean, again, with trusts, I mean, we know about they have this dynamic that they can store cash on their balance sheet, and that can help them through tougher times like 2020, 2021, etc. So you can afford to keep the dividend stable as opposed to, you know, having to react to market conditions. So that's another great advantage of investment trusts.
Yeah, absolutely. James, consumer, been a bit of a skinny week for you on the consumer front, isn't it?
Yeah, skinny, but lots of action in luxury. So we had sales beat from Richemont, which is a Cartier, and Van Cleef and Arpels. But today's Burberry Q1, pretty decent growth across all divisions for the first time, I think, 3 years. But a slight miss on the sales, which disappointed the market, along with some cautious guidance. Earlier in the week, Watches of Switzerland was received. I think there's a bit of a bid premium in that one. So news of a good start in the US, yeah, and signs of improvement in the UK. So contrasting fortunes for luxury names.
Yeah, I mean, it's been such a boom space for many years, but the last couple of years, many of the big luxury firms seem to have struggled a bit, and I suppose most of that is down to weakness in the Chinese consumer dynamic. That's really what's driving, taking the cream off the top, I suppose.
So, looking ahead to next week, Steve, as well, it's Friday lunchtime. What big stocks are you looking out for?
I mean, so there are 3 very popular names due next week. So one we've looked at in our regular coming next week is Alphabet. So obviously the Google parent, they'll be reporting on Wednesday after the market close. So obviously that's going to be a major market mover. And also you've got Intel, been on an absolute tear in terms of share price, all about, you know, the implied turnaround. Whether that turnaround will come through, I don't know. And the other big company as well will be Tesla. I speculate, and it's purely my speculation, that it's going to be, we know the deliveries, we've already seen the delivery data. This is purely the financial data now. I kind of figure that the financial data is going to be a bit soggy. I suspect most of the chatter around it will be about SpaceX and is there likely to be any kind of merger. And I don't suspect you're going to get much from Elon Musk or any of the CEOs, the executives there. But I mean, that's probably what's going to dominate the conversation around Tesla is what about SpaceX?
Yeah. James, what are you looking out for next week?
Yeah, I'll be keeping my eye on Wickes. So Q2 update on Tuesday. DFS this week flagged a slowdown in demand for furniture. So, you know, that big ticket space is really under pressure. But Wickes, the membership scheme, I reckon, should be doing well. Could launch a fresh buyback. I'm just speculating there, given the kind of share price in the doldrums. And this is one that's quite weather sensitive. So in the last quarter, it was rainfall that, you know, deferred outdoor projects. We'll wait and see what happened with the heat wave, you know, whether that coaxed people outdoors for some DIY or if they were hiding indoors.
Oh yeah, I don't fancy doing DIY outside of this weather, I tell you.
No, I never fancy doing DIY.
No. And I'll be watching out for spoons, JD Wetherspoon. We flagged it
a World Cup winner. I seem
World
to
Cup, yeah, flagged it as a World Cup winner. It's done really well. It's beaten the FTSE, and in fact, all the pub stocks. If I just stuck to the pub stocks and the drink stocks, I'd have been all right with those. Young's rival Young's said they had an exceptional trading over May bank holiday weekend, and so next Wednesday Wetherspoons will tell us about the fourth quarter, which is to pretty much now to the middle of July. Young's the same quarter, they posted really quite strong like-for-likes. So I would imagine that Wetherspoons is going to see the same. Anywhere that's kind of big, showing the football, got outside seating, that kind of thing, take advantage of the weather. They should be absolutely fine. We will, of course, get the usual moan from Tim Martin about rising costs and taxes and supermarkets, but half of the course, basically.
Yeah, I mean, this weather is an absolute gift for the hospitality industry as a whole, isn't it? How many people are just thinking, hang it, I don't care, the cost, stick at the credit card, we're going out for dinner, we're going out for a pint tonight, you can really understand that, because people want to milk this moment in the sun.
Yeah, absolutely. That's about it, isn't it, for us?
But just one reminder, so our listeners will be aware that we're putting on a big investor show, the Retirement and Wealth show later in the year. It's on the 6th of November. But just want to give you a heads up. I mean, your regular podcast listeners, let's hope, if you want to get a discounted ticket, so the tickets are normally 30 quid, you can get a 50% discount if you use the promo code podcast. So just PODCAST, and you can get a 50% reduction on your tickets. So this won't be around forever. So sign up, get your tickets in early. We're going to have a whole host of investment trusts and expert investors, some real insights about how to run portfolios, looking for growth, looking for income, and any other questions you basically want to throw at the delegates in the presenters in the show. So remember that promo code podcast, and you can get 50% off your tickets.
Yeah, and tea, coffee, biscuits, and lunch thrown in.
Absolutely, yeah.
Can't say fairer than that. With that, we'll wish you all a top weekend. Cheers.
Yeah, take care.